Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right. Hello, everybody. Welcome back to another live stream. Happy Thursday to you. Hope you're doing well. I'm getting my music started. Hold on. Intro music coming in. There we go. We got the fall theme is in full swing on the live streams. If you're just tuning in, we've been having fun with it. We theme the streams every month. Chandler and James do a great job doing that. Just gives a fresh look to the stream every month. I think it's a lot of work what they do, but I think it's like if you're here every day and you're tuning into the show, we want to keep it fresh and keep it lively for you. Yeah. Anyways, guys, we've got some big news here this morning coming in, and that is, of course, unemployment claims as well as services PMI. It is a loaded morning. We also got ADP non-farm employment change, which came in super low. And if you weren't here yesterday, guys, we didn't need any more poor jobs data. We definitely did not need any more cool jobs data. Things are about to get interesting out there, guys. I'll tell you that. So I've been in the camp of soft landing, right? Which I wouldn't say I'm no longer in the soft landing camp, but I would say I'm getting tested here, because if jobs data keeps coming in this bad, we got to seriously reconsider what's going on here. Some of you may already know, but if you don't know, I was long the S&P 500. I bought the dip, and it ended up being one of my better trades this year. That being said, when price broke through this level of support, I got out of the trade. I stopped out. I trailed out of my position. And, here's the tricky part about this week, guys. Jolt's claims, Jolt's ADP claims and non-farm payroll, okay? That is the jobs data that is coming out this week. So far, guys, we've gotten through 2 of them out of the 4, okay? And guess what? Bad. We haven't gotten to this one, but it comes out in 10 minutes. And we've got these 2 to go. Guys, this is a little bit nerve-wracking. You don't want to see, we had a long conversation yesterday on stream about how you basically don't want to see the jobs market slippery sliding quickly in front of the Fed cutting rates, because it takes the thrill out of the rate cuts. Rate cuts are only good if the economy is okay going into them. And so far, not good, right? Can I get a sound effect for that? Hold on, I'll find this. There we go. Not good. And we got 2 to go. But they both missed. Both of these numbers so far have missed. We got unemployment claims coming out today. So, Nick, what are we thinking here? Well, here's what I'm thinking. The Edge Finder no longer has bullish setups on the indices. A number of factors got me out of the trade. Price action breaking through the structure that I had marked here was a pretty quick one. But, guys, we're looking at a situation in which this is looking rocky. You've got oil who've just fallen off a cliff, which is showing signs of potential global recession. You've got jobs data rolling in just week after week or like weakness after weakness right now. But you might say, well, Nick, didn't we want weakness? We want a weakness so they would cut rates. Yes, but we don't want rapid weakness. What we're getting here today is more signs of, more weakness than we thought, right? So I took profits on some of my indices trades because I'm not feeling so comfy anymore. So what am I in? What am I looking at? Well, I am still in a gold position, which gold is killing it today. GLD, I'm in a GLD long position, which this one has recovered a little bit. And I'm also in the Russell, which, the Russell's surviving here this morning, but we'll see. I'm going to potentially trail out of this trade too if we break through the support. We're sitting at support right now. If this starts sinking lower, guys, time to get out of the Russell, and that would put me at no long positions on the indices. Now, hear me out, because I am not saying that I am suddenly shorting or super bearish the NASDAQ or anything like that. I'm not saying that, because right now on the Edge Finder, if you take a look at, let's narrow our focus for a second to indices, okay? So with indices, we've got a -3 for the S&P 500. We got a +1 for the NASDAQ. Dow's getting a +4. Russell's getting a +2. So long story short, I have gone from bullish on the indices to strictly neutral on the indices. What that means for me is no rush to get into indices positions at this moment. Now, if you listen to a few, the last couple months, I have been indices city, right? I've just been constantly looking for buys on the indices. I've been very bullish on them, but we've had a really strong year. I'm still overall thinking, okay, stock market can keep going, but what do we need for that to happen? We need this section, guys, to turn blue. Okay. Long story short, on Friday, we need to see the unemployment rate, the percentage, to not go up. And we need employment change, or NFP, to be strong. I'll tell you what, if those things happen, suddenly I'm probably long the Dow, right? Because it's pretty close already. That would give it that would swing this thing by 4 points, right? If we had good data on Friday, that would take us from a -2 in the labor section on the Edge Finder scoring up to a +2, which could change it by a factor of 4, putting us at a score of 8. We could see a bullish setup for the Dow. But right now, we can't jump to conclusions, especially when we look at this, guys, and we say, oh my gosh, we're just getting poor data here this morning. Now, we've got 4.5 minutes to go until we get the unemployment claims. But we had ADP this morning, not good. JOLTS job openings in the United States, not good. Economy is looking a little bit rocky here, and we need services PMI, unemployment claims, NFP. We need those things to start holding their own. We need to see some strength come into this thing, or I get really nervous. Now, I'll tell you this. I've not touched the indices, and I'm feeling good about it, because here the indices are just sliding further, and I wanted to buy them. My bias for the last few months has been long, right? I've been buying and making good money on the indices. So I looked at it from the price action. I was like, oh yeah, let me find some longs here. Looked at the Edge Finder, neutral, can't touch it. That probably saved me like $5,000, right? So that's the value of using tools right off the bat. That probably saved me a loss, which a loss for me can be anywhere from, $3,000 to $10,000. Just depends on allocation and what I'm trading. But anyways, my point here is the NASDAQ, the S&P 500, they don't look great right now. Now, in 5 minutes, guys, claims might come out, and they might come out really healthy, and the market might round out and actually start finding a bottom. But I can't make that conclusion without seeing the data first. Right now, what I don't like about this is, okay, guys, the data that we've gotten recently is looking sketchy. It's looking a little uncertain. Gold is moving higher. This is great for my gold position. Now, you'll notice also, if I add metals here into the picture for the scoring, that gold is getting it at +3, which is just a neutral reading as well. But when I took this position, gold was giving me a bullish reading on the edge finder. So I picked it up on a bullish signal. Plus, so it's dropped a little bit since then. With some of the data that's come out recently, gold has been positively affected by it, right? Jolt's coming out weak, and ADP coming out weak this morning. Both of those very positive for gold because it's showing some uncertainty in the labor market, and gold typically shines bright when there's concerns about the labor market, etc. So we got about 2 minutes to go until that happens. Also, just a quick update on the price action side for gold. Very simple. Support and resistance. I'm looking for a breakout in order to trail stops. If I can get a break above the highs, wonderful. I can look for a chance to trail stops and just kind of ride the move. But I've been in this trade, man, for like 12 days or 10 days or something. I entered it over here. It went all the way back up to the highs, came all the way back down. Looked like I was going to get, a reversal here. Didn't happen. Support held again beautifully. It actually, look at that. It like double bottomed probably on the 4-hour or 1-hour chart. You could have seen that. Double bottomed right at support and ripped through these, ripped back up towards the highs with this number here this morning. Again, could all change in about 1 minute with unemployment claims. That is going to cause some volatility here. I'm going to switch over. Just go ahead now to the all markets view. So what we're looking at, guys, you've got the S&P 500 right here, NASDAQ right here, the Wall Street, which US 30, so Dow Jones in the bottom left. The dollar index is right here. Pound is right here. Euro is right here. Gold is top right. And oil is bottom right. So I got a little bit of everything on your screen for you, just so you can see the reaction across the board. So yeah. Okay, guys, we got just about 30 seconds to see what unemployment claims brings us. We'll see if it causes any volatility. Has the potential to, but doesn't have to. Depends on how surprising or not surprising the data point is. I will give you guys my reaction here in just a second. We'll go ahead and roll our breaking news. All right, let's see. Just about 8 seconds to go on unemployment claims this morning. Let's see. All right, unemployment claims, dollar index, bit of strength there would suggest maybe unemployment claims were a little bit better than expected. Let's see. Forecasting for 231,000. 227. Okay, so they were lighter than expected. So that would be considered better than expected. Market's going to like that a little bit. Dollar index bouncing a little bit off of its lows. But it's not a huge change. Not a huge change from what was forecasted. We're getting 227K. It's still pending on Forex Factory, but 227K, that puts us right around where current things are or where expectations were. Let's switch back over, see what's going on here. Forex Factory's having a field day this morning. There we go, 227. So not much of a beat or miss. So not going to cause a huge volatility spike. I think that kind of defaults us to where we were looking. ADP, Jolts looking a little bit sketchy here. NASDAQ and S&P. S&P is pretty much flat on the day. NAS is slightly lower. The Russell's doing okay. Russell is one position I'm still in. I'm also long gold. Oil bouncing about 0.94% here. Silver up about 1.6% this morning. Take a look at some currencies. Euro dollar hit support, bounced. I was watching Euro dollar, but unfortunately at the time it didn't have a setup on the Edge Finder. Now it does, I believe. Yep, Edge Finder got us set up with a bullish signal here. So looking at, for me, I'm looking at Euro, Kiwi, and Pound, all for possible long setups for the currency side of things. Nothing on Pound. Euro, I like if it comes down to this area, 1.1039. I'm interested in that. Dollar yen, still look at that. Yen is holding strong right now, pushing dollar yen lower. NZD USD, also watching this one for a possible retracement down to the 38.2% retracement. So I like this. I like these setups, but they're not quite at places where I can execute any positions. Gold is on all-time high watch right now. We're pretty close. If gold has another squeeze higher here this morning, it is possible that we could put in a new high here today, which would be great. I'm looking for a new high on my position in order to trail stops. So if we can take out these highs, that'd be great. If we take a look at the 4-hour chart, get a little closer view on this one. 4-hour chart is testing. It's getting close to resistance. But man, this has been a very consolidation heavy last couple weeks really, or days. You could see gold finding heavy resistance right around the 25.30 25.25 zone. Like this area, big resistance, this area, huge support. So 24.75 has been a pretty good level of support for me now, because I am, in my position. I like to trail stops. What I'd be looking for is something like this: a break through the highs, at which point any sort of higher low, I would get the chance to move my stop loss into profit. We could take a look at the P&L. I'll pull up GLD. So this is a position that I'm in. GLD is up $850, which is not a huge position for me, but still good money. $850, we'll take it. Let's see. Yep, gold pushing higher on that ADP statistics, as well as unemployment claims just kind of came in. They were pretty much a flat result. And there's just more coming. There's more coming because after this, we have the services PMI. So the question is Eddie says there's no soft landing coming. Well, here's the thing. Nothing is ever certain when it comes to markets. So you could theoretically be right. But there is also a pretty good case for a soft landing still. The tricky thing about the economy is it's very hard to predict. But what we do know is that there's a lot of stuff that's hanging in there pretty well. So if we take a look at, for example, GDP growth, if you're talking about if you're talking about a hard landing, then what you're talking about is negative GDP growth, right? That's recessionary. And so we are actually very far from that. We've actually seen pretty strong, higher than expected GDP statistics coming into, the latest data. So when we look at that, we say, okay, that's actually very, very promising. We also had a very strong round of earnings for companies. And if you're going to have a hard landing, you probably would see it first with terrible corporate earnings numbers from the big companies. We had a pretty okay one, right? NVIDIA beat earnings. For the most part, most of the major tech companies did pretty dang well. So you look at that and you said, okay, there's some evidence here that a soft landing is possible. That being said, where I'm very, very on high alert here, we have services PMI coming out in an hour and a half or so. So here's the thing. If you see services PMI come in higher than expected, let's say it's strong, then that really supports a soft landing idea, because then you still have positive forecasts for the economy, positive outlook. But if you get services PMI just complete miss, like poor numbers, it starts to question whether or not the Fed is going to cut 25 basis points because they feel that they can start cutting and it not be a big deal, or if they're going to start cutting with a 50 basis point cut, a bigger rate cut this month, which could lead to a little bit of concern, a little bit of uncertainty about what is going on. So manufacturing PMI, for example, came in yesterday and it was lower than forecasted. Even if it was just by a little bit, market still doesn't want to see that. They still want to see data points that are coming in strong, not weak. Retail sales was strong. We'll get our next round of that here this month, which will be very interesting. We had a really strong beat from retail sales. So the consumer surprising expectations. So we'll see if we get some more of that. Again, we had ADP this morning. We had unemployment claims this morning, which was pretty much a flat, is exactly as expected. Job openings yesterday, though, were not good. Look at this, guys. We sunk lower. The trend keeps going down here, and it's starting to get to a point where it's like, okay, we're missing expectations pretty consistently on the labor front. That's not good, right? So the market currently is thinking that there's like at least the latest thing I looked, I think we could pull this up. Yesterday it was like a 50-50 chance between a 50 basis point cut and a 25. You can see here we are at a 55% chance of a 25 basis point cut and a 45% chance of a 50 basis point cut. So when we look at this data, we say, okay, market is definitely more worried than it was 2 weeks ago. A couple weeks back, it wasn't nearly as concerned, right? It wasn't thinking about, there was some real strong round of economic data. Now we look at some things, we say, we're not so sure. We look at things, we say, okay, weak jobs data is rolling in. Yesterday, again, that JOLTS jobs were pretty rough. Take a look at JOLTS over time. You can see it is trending lower. And so that has me a little bit concerned. In terms of the top setups, I just want to take out the neutrals for just a moment. Make sure we take out minor currency pairs. You can see the watch list is pretty light right now. I've got bullish setups on Kiwi dollar, Euro dollar, and pound dollar, but all three of them are kind of at a place of they're not quite ready. I mentioned this earlier, looking for pullbacks on all of them. None of them are really at levels that I'm watching. So I'm looking for deeper retracements on those setups for opportunities long. So I'll tell you this, right now, it's an interesting week for me because I am making an active decision right now to not be long the indices. And not being long the indices is recently I've been very long the indices. I traded this move. It was really great. I made a lot of money on that. And then I stopped out right here. So my decision not to be still long the S&P 500 is a decision. Even though I didn't place a trade, this is a decision that I'm actively making because by not being in a trade, there's kind of a risk and there's kind of a reward. So I'll break this down. If the stock market like leaps and bounds jumps and I'm not in the position anymore, the opportunity cost was lost. But if I'm not in the trade, if I'm not in the S&P 500 and it drops, then it was a very good decision to get more cash heavy. Because I trade on a stock brokerage account, I trade shares. So I'm buying shares and I have available cash in my account. Right now, I have a lot of available cash right in my account. The sell-off that occurred on Tuesday and has kind of followed through this week has put me on the sidelines, stopped me out, trailed me out of some of the winners that I had, like SMH. I was long SMH. How's SMH doing today? So SMH, I trailed out right around here after it broke support. So I trailed out there. That might end up being a good decision. So if SMH drops down to this point, I'm not short the market, so I'm not making money, but think about how much money I would have saved. That's sometimes how you have to think about this. Sometimes not taking a trade is genuinely the best thing you can do. So if we see SMH plummet from here, then I will have felt really good about my decision to get out of that position. So it's something to think about, right? You just have to think, okay, so do I want to be in the market? If you trade like me, I trade a lot of indices and sectors and I trade gold. Mostly I'm on the long side of sectors that I like at certain times. Rarely am I short unless the indices are just like crashing. Like if it's very hard for me to short indices unless we are like apply moving averages and all these are pointing down and trending lower, then I might look for shorts. But this has been a really strong up year. I've been very long for most of this year. but getting a bit cautious here as we close in on the Fed's rate cut, plan here. I have concerns. I have questions because I'm like, the labor data is really sliding. September is also seasonally a very poor month for stocks. I've discussed this on the stream a bunch of times, but let's just pull this up. If we take a look at the SPX500, look at this. So I've made this point a bunch of times, but the S&P 500, September is historically speaking a pretty bad month for stocks. And we'll see if that holds up this month. It's not the only reason that I'm not long. There's a couple reasons, but it does play a factor. If we know that this is historically like a tax harvesting month of the year that could start, if you have, institutional money returning from vacation and perhaps they choose to close out some positions to reallocate for next year, there's all sorts of different things, Point is, long story short, there's a negative expectancy in the month of September for stocks. So I got to be careful. Please release a free 30-day trial for the Edge Finder. Hank, I don't think we're going to be doing that anytime soon. The Edge Finder has a lot of people who are very serious for using our tools, and we do offer trials, but they are paid trials. Trials are something that we do on a manual basis. A real person facilitates those trials for 30 days, answers your questions, works along with you. So we don't currently offer any sort of free trial because to be completely honest, like we have people who want to buy it pretty bad, and we work with the serious buyers first. But then also we have a lot of people who just want to try it. They're willing to pay for the time to have someone help them and to answer questions along the way. So we do offer trials, but they're not free. Speaking of that, if you guys would like to apply for that, if you'd like to apply for a paid trial, the cool thing about our paid trial is that it's 30 days access. And while you try it, when you're trying it, you have someone who can help you answer questions along the way as you're using it. So you get a dedicated rep that helps you out with it. And that trial amount gets credited towards your final purchase. So whatever you pay in your trial, you actually get credited towards your final purchase of the tool. So maybe we could drop the link here to the Edge Finder trial application. If that's something that you're interested in getting access to, you can click the link right here and apply there. Someone from our team will get you set up there. And also, if you're just interested in getting the Edge Finder, if you don't already have a copy and you'd like one, it is currently 5% off. So if you'd like 35% off the Edge Finder, we will drop another link here in the chat to speak directly with a member of our team. That sale ends at the end of the week. So if you'd like some information about that, 35% off can be found by speaking directly to a member of our staff who can set you up with that discount code. So send us a direct message using this link here, and it will connect you to a real person, not a robot. They can help you if you want to like pay with crypto or do payment installments, or you want to try it for 30 days. All of that information you can get just by speaking with someone on our team using that link. All right. Have I checked the Fed Watch tool? Yes, we did that earlier. We discussed 45 to 55% chance in terms of a 25 or 50 basis point cut. All right, guys, we're going to take just a quick break, and then we are on to Technical Thursdays. We're going to be talking some charts with Miko and Marco coming in just after this quick break where we thank our sponsors. Stay tuned. We'll be right back. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show. All right, guys, we're back. Miko, you and I are cut off, but we will be back in just a moment here. We're just changing the stream. How you guys doing?
Hello.
Good to have you back on the show. And Miko, Marco, we've got our standard approach, but James told me we should shake it up. We should do something different. So maybe we can change our variation today. Maybe we can start with Miko. Miko, what is your let's do it this way. If you had to pick one chart to share with us today, we'll look at more, but if you had to pick one, what's your chart of the day? What are you most interested trading currently, watching right now?
Well, I'm currently in a Aussie dollar long, so I'll probably have to pick that one. Yeah, I'm looking to buy this one. I'm looking for a swing back to resistance around 0.686 here. I'm very bearish on the USD. We might see a bit more strength, but of course we'll see what happens with NFP on Friday. But I'm looking to try and take this one higher. This is my first area of marked a couple where I'm willing to buy from should we pull back a little bit deeper. But we have seen a nice reaction here. So I've hopped in. It was a little bit late to the party. I was meant to enter yesterday, but I missed the entry. So I entered this morning, and price is still roughly around my entry. But I do see a lot of upside with this one. And especially if you can hang on to that daily level, and especially if USD does keep falling. So I'm keeping a close eye on the dollar. The lower lows and lower highs still look pretty intact to me. So I'll expect this one to come back to that low, and hopefully that can help out with my Aussie dollar position. But if I had to pick a pair, it probably would be the pound trading, which is some longs in Aussie dollar.
Okay. I actually have an interesting thing that I'm looking out for on NZD USD, which is, not the same pair, but similar. They typically do move kind of in the same direction. If we do see the Kiwi dollar move lower, I was looking at that as a possible long entry, but seeing some dollar weakness coming in here this morning already. So may not get the chance, may already be pushing higher. And I imagine that would also positively impact your Australian dollar trade as well. So is your thought process, you do typically like to trail stop, so you're looking for like a break through the highs and then like continuation play, is that right?
Yeah, exactly. There's some resistance above us, some there as well, but I don't have a target per se. I have where I expected to get to, but I will be trying to trail, and I'll be using discretion. So it depends how price is moving, how aggressively I will trail. If it's not looking too good, I might be a bit more aggressive. If we're seeing really big candles, then I might give it a bit more room to breathe. But yeah, I will be trying to see how far I can take it.
Okay, fair enough. Chart of the day, Australian dollar against the US dollar. I like that. Marco, chart of the day. What's your favorite one today? Current best setup or idea?
Yeah, so for me, it's going to be the Aussie and the Japanese yen, which is currently producing a very clean, I would say, a descending channel. So it's consecutively breaking these lows according to the way that I look at the market. And the more breaks of the lows that happen and no breaks of the highs, the more likely it is for the price to actually start an uptrend. So I'm very interested to see this reverse to the upside. I'm expecting something like this to happen pretty soon, and then I'm going to be looking for buy setups. So just by looking at the patterns that are being printed right here, the price is telling me that it's very clean and that it wants to go up. So that is going to be on my radar for today. And the other JPY pairs as well. I think the JPY pairs currently look very clean and active, more active than the US dollar pairs. But this one looks the best out of all three. So I have EJ, AJ, and NJ, but AJ is printing the cleanest formations.
Okay. Yeah, fair enough. I think the yen pairs have been really interesting, actually. I was looking at USD JPY this morning, and we've had some more. I'm sure you guys, everyone remembers here who's watching the big slide that we've seen in some of the yen crosses, which largely was triggered by, last month's NFP report. Last month's NFP report came out of the US very, very weak, caused a lot of fear. Long story short, the yen got really strong. And what's a bit concerning as we go into this week's NFP is we're seeing some of the same worries start to resurface. Basically, the worries being the US labor market is looking pretty rough. It's starting to show some weakness. We'll get more data, of course, tomorrow with the next NFP report. But that definitely concerns me because it's like, we have not really recovered at all from all that big slide. I would have thought that we would, I think I discussed with you guys, I thought we would see a little bit more of a gradual return. But the problem is we've seen more data come out that has been more evident of weakness in the labor market. So the dollar yen continues to drift lower. But in terms of a price action standpoint, I'd say the yen pairs are producing some really clean kind of candles here on the daily chart level, some pushes lower. And I think Miko, the last time we spoke, you were looking at some yen crosses on the bearish side on retracements. Did you ever look at any trades, or are you still watching stuff? What are your thoughts on the yen?
Yeah, so I'm still looking at them. I did take a New Zealand yen, excuse me, a New Zealand yen short, roughly around here. I did get stopped out on that position, a little bit too early to the party. But now that we've seen some momentum, as you just discussed, I'm starting to be interested in looking to short them. New Zealand yen, not so much in particular, but I'm really liking Euro yen, which you had on your screen. Really nice breakout to the downside. So this has just become a lovely level of resistance to look at. Should we revisit? Hopefully a retest, and if the trend really wants to continue, because we had such a big sell-off and prices tried to fight higher, but it's really struggled, and now we're seeing the bears step back in control. That could take us back to the lows here. So should I get the retest them after, it could end up being a really nice trade and possibly another swing back to that low and maybe beyond it as well. So I still like the yen pairs to the downside. Maybe entered a little bit too early there on New Zealand yen, but now we're seeing some nice momentum. I'm interested again, but I would say Euro for me looks the best of the bunch.
What I find interesting about the yen crosses too is, Marco, I know you've talked often about, like, when you do see these big V-shaped movements, a lot of times they are kind of like, it's like a big fluke and then it kind of continues in that direction. What is interesting this time around, when we look at the yen crosses, is you saw this huge slide on things like pound against the Japanese yen and Euro yen, like Miko was just talking about. You saw the retracement, but to me, on price action basis, if you've got like some lower high forming here, or maybe just in a simpler case, you're starting to see that rally fall apart, just from a psychological standpoint, people are probably shell-shocked by how fast that thing can move. And now they're seeing, okay, it's breaking support, as Miko just mentioned. We're breaking through key levels. That the rally seems sort of showing some weakness. And I can imagine, with people seeing how fast this thing can move to the downside on weak data, if you get an NFP report that comes out weak, I actually think that the risk to reward on the short side makes a lot of sense. So, like, if you're, let's just say between now and NFP, you get kind of this move and you say, like, okay, I think that if we get a weak NFP number, the risk to reward is very good to the downside, and you're willing to, put a stop loss that's a little bit further away to account for possible slippage that could happen on FP. If you get like a repeat function of last month, you could see some very aggressive swings on yen crosses. Are there any other yen crosses that you have your eye on, Marco?
I did have my eye on all three of them, but so basically all three of them are telling me on the 1 hour that they want to go up. They were really struggling to go down, especially the Euro and the Japanese yen. This was one of the cleanest descending channels I've seen, but then it did fail lower. But yeah, just by this momentum, it's telling me that it probably wants to reverse maybe in the short term. And NJ is telling me pretty much a very similar thing. It did have this nice push down. It did take a short here, but got stopped out for a 1% loss. And then the price started pushing up with some bullish momentum. So I would say short term on the 1 hour, all three of them are gonna, not that they're gonna go up, but the probabilities are telling me they want to go up. So maybe on the daily, this is just like a small correction before the drop continues. We will see, but I'm definitely interested in buy setups on all three of them.
They're definitely, all the yen crosses just moving very aggressively. Next question for you guys. I want to go Miko on this one. So gold and silver kind of holding their own. I mean, despite the stock market, which has been sliding a little bit here, you've had gold is still near the highs, silver not quite so strong. But what are your thoughts on gold and silver right now? Do you have any positions or ideas on these ones?
Yeah, so gold is looking really strong. I actually missed an opportunity here yesterday. But yeah, the market is still holding level after level. It's kind of like stepping stones. We've got resistance there, we broke through that. Resistance there, we broke through that. So I'm expecting the same thing. Resistance here, I'm expecting us to break through that. I'm still seeing consistent higher highs and higher lows. Higher time frames still look relatively good. It's a little bit slow, but the key thing is that major support is still holding. So that's the key thing to take away for me with gold. Yes, we have been sideways for the past kind of 1 or 2 weeks here, but I wouldn't be surprised that we see a big breakout soon. I don't know, maybe NFP could be the catalyst for that, or maybe sometime in the near future, but I would expect more upside. So now that we've had a successful bounce off the low there again, I would say the opportunity now would be the retest of the high. We've come back, respected on numerous occasions. So clearly the market's quite interested at this price around 25.30. So should we get a nice break of that, a retest, I feel like we'll probably see some more, see some higher highs in the future.
Yeah, it's looking like it wants to try at least. We've been in that consolidation zone for gold for the last, few weeks here. Just can't seem to break through that 25.30 level or the 24.75 level, but we will see. Marco, thoughts on gold or silver?
So for me, gold is kind of struggling to go up. It's not the sort of momentum that I want to see on the daily chart. So it is moving up, but again, each time it breaks these major highs, we're getting a lot of weakness and just not getting the sort of momentum that I want to see. But then again, gold does like to move in these more choppy patterns. So I would say there is more upside possibility, but not a lot. Just by gauging the momentum, I'm not seeing like huge amounts of momentum. And silver looks even worse, if I remember. Yeah, silver just looks very flat, corrective, and range bound right here on this area. So I'm not really seeing a big bullish case, but maybe a bit more upside. Again, I'm not seeing that sort of strong momentum that I want to see as a technical trader. So yeah, just kind of struggling to go up.
Yeah, it's almost like it's in like a grindy, slow upward trend rather than the more aggressive and clear uptrend that we saw earlier in the year. There was a period of time where, you can see it on the far left hand of your screen there. You had those like clear, massive upward movements there, and then we've kind of fallen into more of just a choppy, grindy upside move, which, for my style, and I imagine for you guys as well, like the more decisive, super clean moves one way or the other are a little bit easier for me to trade than the choppy ones. When it's choppy, it's
for
like,
sure.
Especially with trailing stops, Miko, like, oh man, trailing stops plus choppy markets are not always the most fun, because you're sitting there and you're like, okay, we're getting a little bit of move, trail a stop, and then it, comes back down, just normal chop takes you out, which can be very frustrating. But it's all one of those things. I think that with your exit style, which is one of my favorite conversations in trading, I'm always interested in like how people choose to exit the market, because, there's a million different ways to enter the market. I personally think the concept of entries is overrated massively. I think exits are far more important personally, because how you choose to manage a winning position is so huge. Like if you enter this gold move, this is cherry picking the perfect one for, Miko and I's type of style, where we're trailing stops indefinitely and we don't have targets. Obviously, in this case, everyone's going to say trailing stops are the best, and then people are going to look at this period of time and say trailing stops are the absolute worst, because now you can never, everything is just giving you a small win or a loss, and you're never capturing the full move. So I think I just want to give you guys, I know we've talked about it in the past, but I'm sure there are new listeners who might benefit from this quick question I'll have for each one of you. Miko, I know you use trailing stops, but can you give us any information just on generally how you choose to exit the market?
So yeah, well, I used to use finite take profits in terms of I would target a certain level, place my take profit there, and then wait for the market to take me out. It's either that or break even. But looking back at my trades, there are, well, certainly last year there was some big wins on the table, which I left, which could have meant I made bigger returns with taking less risk. So my plan was to change that up and looking at trading stops. And since then, it has been a bit of a ride because you've been adjusting to it. But I would say my biggest takeaway from using trading stops is that you have to really understand what condition of the market you're in, because like you just said, when the market is trending, trading stops are great and they can really, really make you take advantage of the move. But if you're trading within a range, it actually makes more sense to probably not use a trading stop loss and use actual finite take profits. So being very aware of the market conditions will actually help you utilize the trading stops a lot more, and really maximize your exits and your profits.
Yeah, and I got to say, I think that the one that's always tempted me, I've never made the shift to doing it myself, because I've got my system, I know what works for me, but the middle ground seems to be like taking partials, because then you're like taking profits in pieces. You're still letting the winner go if it wants to keep going, but you're also locking something in. Taking partials is not the holy grail either, because there's also times where you take partials way too soon, and then the last remaining runner is so tiny that it's like, okay, this is not. So there's pros and cons to everything. There's no holy grail. There's always going to be comments who respond to you and say, oh, well, you should have just done this, or you could have done it this way and it would have worked better. But markets change, and dynamics, when they change, suit different strategies better or far worse. So that's the tricky part about trading, is nothing works perfectly all the time. But thanks for your answer, Marco. Same question to you. How do you handle exit? What's your general theory on exit styles?
Yeah, so for the trending entries, I use a trailing stop loss, but for the range bound entries, I have a fixed 3-to-1 take profit. And I can give you an example of a trailing stop loss. So if you just look at this is the euro and the Japanese yen. This is a reversal trade with an ascending channel and a big red candle confirming the start of a downtrend. So I basically get in on a sell setup with an initial 12 pip stop loss, and then I just follow the trade with a trailing stop loss as these major highs form. So this is an example of a major high. This one, this one right here is a major high. Then we go lower down to this one. So basically, as the price keeps going lower and creating swing highs, I just move the stop loss on the swing highs, and in the end, this ends up taking me out, I don't know, somewhere on the bottom, but basically just moving the trade, the stop loss on the swing highs. And this is good for Forex, but for the S&P, I found it's not the best solution, because the S&P tends to be very volatile in the 8 hours when the actual stocks are being traded. But outside of those 8 hours, it's usually very much choppy and just flat price action. And I usually get taken out with a trailing stop loss outside of the trading hours of stocks. So I found with the S&P, I have a bit more luck or a better win rate, better profitability by using a fixed 3-to-1 risk reward, which is pretty interesting. So it's all about, I would say, adjusting the management and the exit to the actual instrument.
Yeah, and there's nuances with each different chart. For example, with the S&P 500, if you've done back testing on pretty much any short trading strategy in the last 2 years, it's probably very unprofitable. But then if you expanded it to 2022, there's probably some really nice shorting opportunities, because that's the other thing you kind of have to think about with for people in the audience listening. When you're testing something, you have to remember that there are certain periods where things work really well. If you had any strategy for the S&P 500 where you basically bought aggressively every dip for the last 2 years, you looked really good. But if you broadened it out to 3 years, you had some really bad drawdowns, because I actually had some real ones. So, I took a lot of losses in 2022 trying to be too cheeky, too bullish at the wrong time. So I know from experience that a down market can wipe away a lot of gains very quickly if you are too overly, too not willing to switch. To Miko's point, knowing the style or the market that you're in is imperative, no matter what you're trading, whether you're trading currency pairs, gold, indices. Know the market you're in, know the behavior that it's in. Right now, we're in a bull market, so anything short side for me is just way too hard to time. But if we enter into a bear market, short strategies can work again. So it's like you kind of have to just be aware. But great stuff there, guys, and thanks to both of you for go ahead.
How do you trail your stops on the S&P? Do you just trail it during the 8 active hours, or do you do it like 24/7?
Yeah, no, that's a good question. So one of the big differences you mentioned about like getting stopped out during overnight periods, because
Yep.
it depends which exchange. If you're trading on the futures market, it's pretty continuous throughout the week, so that wouldn't happen as much. The way I trade it, the frustrating part is that can happen where I'm trading ETFs, which close at technically 8 p.m. and open back up, I think, at like 4 a.m. US. So there's this gap in the overnight session where sometimes it can trigger or it would have triggered my stop loss, but didn't. So I can take on extra losses. That's what happened to me in the big slide that we saw on that big Monday Tokyo sell-off morning a couple weeks ago. That was no fun. I took on a lot of slippage because of that. Fortunately, there's also times where it, kind of does the opposite, where it gaps up a lot. So it's kind of one of the downsides to trading the S&P 500 the way I trade it. You can trade on the futures market. That helps a little bit of that issue. But it's also not a huge deal to me simply because I'm more of a swing trader. So I'm looking at like daily chart levels. So my sizing is a little bit smaller to also account for those gaps, so that those gaps don't kill me. It's just that one morning, I'll show it to you really quick just so I can add some context. Check this out. So I was long on QQQ. Let me see if I can switch my screen really quick. So I was long on the Qs, which is the NASDAQ 100. And I believe I was long around here. And my stop loss was supposed to be like here, somewhere around that area. I'm just roughly guessing. So you can see the Qs opened up down here and immediately triggered my sell stop order. So I ended up taking like a 4x my usual size loss, which sucked. But there's also times where like this, where like I'm long, and then the next, the opening day, I'm like up a huge amount because the market gapped open. So gaps are irritating. That is one downside. But as we all know, like there's something pro and con. Like a big con of Forex is like swaps can suck, right? They can eat into your profit. So like everything has its pros, its cons, etc.
Yeah, the swaps can be rough, especially on the JPY pairs on a Wednesday because it's triple swaps.
Oh yeah,
if you're short, you're basically screwed.
Yeah, that's not fun. Well, that's the thing, guys. I hope by everybody who's listening, like you learned something just from these sorts of shows. Like there's pros, there's cons to everything in markets. Nothing about it is easy, but with enough, effort and learning this stuff, there are ways you can find what works best for you. So Miko, Marco, thank you guys for coming on the show. Before you leave, I just want to mention to everybody who's watching, if you guys enjoyed their commentary, please go do us a big favor and go support Miko and Marco on their own YouTube channels. They put out great content themselves, and they're regular contributors to the A1 Trading Show. So we want to make sure that we thank them for coming on by supporting their own social media content. So Miko, Marco, thank you guys very much, and we'll see you next time.
Thank you. See you next week. Goodbye.
See ya.
Cheers.
All right. Always good to have those guys on again. Some of my favorite conversations we have on the stream is with Miko and Marco, because we have different styles. And I think that that's a valuable thing to have Miko on, who is, more of an FX trader than I am. We trade in a similar fashion, but he trades more currency pairs. I trade more gold and indices. And then we have, Marco, who comes on, and he's definitely more on the Forex side, but he also trades usually on a lower time frame than me. So the other big nuance about both of them is that they're both purely technical traders, and I am majority fundamental. But the cool thing about this show is by bringing on people who have just differing views and differing ways of approaching the market, you as the listener, I'm hoping, are getting something out of our conversations. We're finding common ground, and we're finding things that we do differently. And that's the cool part of having kind of a conversational type, rotating in and out guest host show. What about US 30? US 30 is about flat on the day here. Everything's coming down to services PMI. We've got that in just about 45, 50 minutes here. So services PMI here this morning, probably the last major market mover for the day. If we just do a recap on what moved this morning, we had ADP come in very light compared to forecasts. They revised the previous number down as well. So revised from 122,000 down to 111. ADP really rough. JOLTS jobs data yesterday also very rough. Look at this. Jolts came in. If you missed this yesterday, this was absolutely a rough day yesterday for jobs data. It was not good. It was not good at all. Pretty consistent theme here this week so far, which is jobs data coming in light. And that is especially concerning as we get closer in on where the Fed is expected to cut interest rates. So if you have interest rates cut on very weak economic data, like if we start to see the jobs market data like NFP on Friday, like non-farm payroll comes in light, unemployment rates ticks up, it's gonna be a little bit concerning. These are my current top setups. You can see the indices have fallen off of the page. This is including indices, but they are not they're not bullish enough. I've removed neutral readings. This is all we've got: pound USD, euro dollar, Kiwi dollar. I'm looking for bullish setups on all three of these. And that's all I've got. So the indices, I'm sidelined. I'm no longer in any positions on the SP500. And I also closed out of my SMH trade for a profit. Both positions were really good trades. But with some of the economic data starting to sour, I'm just getting a little bit cautious going into NFP. Now, NFP might come out and it might be rock solid, strong jobs data, and the market rips higher. That could happen. And that is a risk that I'm kind of willing to take. I'm kind of willing to say, you know, if NFP comes in really strong, then I'll miss the move. But I also could see NFP coming in based on all this data we're seeing this week, really light. Job openings really weak. ADP was weak. Unemployment claims came in right around as expected. So I don't know what's going to happen with NFP, but it will greatly impact my opinion, because if we get NFP and it's really strong, I'll probably look for indices long. So I'll probably look for like long on the Dow Jones, etc. But if we get NFP weak, it's just going to signal some red alerts for the Fed meeting that's coming up in a few weeks. So we will see. But I do like US 30 on the long side if you get strong jobs data. If NFP is a big win, I like the Dow, because into a rate cut, I do like the idea of getting some exposure to more value stocks, more stable companies, because we don't know how the rate cut is exactly going to play out. You never do. But historically speaking, value companies typically do well into a rate cut. That also includes the Russell, which I am still long the Russell. Russell's still going pretty well. IWM is a position that I'm in currently. And we'll stop out of this trade if it breaks through support. If we break through the support level here, I got to get out. Take profits on it. Move on. But we'll see. Services PMI has the potential to move the markets a good bit here. Guys, I'm going to take a quick break and I'm going to bring in Forex James to take over the show for a little bit, talk some more chart setups, and then I will be back with you guys to watch the services PMI data as well. So before I step out, just a reminder, guys, if you want to get access to the Edge Finder for 35% off, we're going to drop the link here in the chat to where you can speak to a member of our staff about getting a copy for that huge discount that we're running through the end of this week. We extended this until the end of NFP just because we had some people who were wanting to get a copy but missed it on, we did it for a very short period last week. So if you guys would like to get access to the Edge Finder 35% off, you can do so by clicking the link in the chat right now. Send us a direct message, speak to a member of our team who can get you hooked up with a copy for a huge mega discount. 35% off is a huge discount off of its price. It is a one-time fee to get access to the tool, and then you get all of its future updates and improvements completely for free. So don't miss out on your chance. 35% off ends on Friday after NFP. So take advantage, click the link, and we'll be right back after this quick break with James taking over the show. If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
Hello. Let me just sort that out. There we go. That's fine. Hope you're all doing well. How is everyone? You all having a good, well, I guess it's an end to the week now. Hope you didn't lose money during the US news today. It wasn't super high impact, but we did see some movements on the dollar. So actually carrying on from what Nick said regarding the indices, he was talking about Dow. I'm looking at the S&P. So you can see at the moment, more of a basic idea. I need to assess after we've had the Fed meeting and see what the situation is really in terms of the economy. But so far, this seems relatively okay. So you might see the orange line, which I'll get into in a moment. But so far, we've got the fib from low to high, 50% level to 618. So this is the zone I generally buy from. Looking for a pullback into here, and then obviously further up into new all-time highs around the 6,000 mark. So regarding the orange line, what I've got here is the seasonality. So what we can see is if we draw seasonality, and this is over the past 10 years, from the end of August until the end of September, it's generally a very bearish period. So what do we see after that? Well, we see from sort of the 30th of September until the end of the year, pretty bullish. You can see the stats here, all very, very bullish. And again, this is just based on technicals and seasonality at the moment. And Fed cuts will or likely may help this position. The only sort of downside is if we've got a weak labor market, that possibly will start affecting the consumer spending of things. However, I think this is definitely a trade I'll take a stab at, and we'll see. We'll see how it goes. So yeah, I think it's probably one of the most convincing ones. But again, this is 25 days away, so nothing really that I'm looking at immediately. Same with pound dollar. Pound dollar looks good, and I'm going to refer back to seasonality. If I don't have it open, so it is what it is. But yeah, the seasonality on pound dollar is pretty bullish again as we sort of go into the end of September. Just looking again for the 50% pullback. That's kind of the general rule I've got, and we can see the 200 moving average on the daily here is sort of sweeping with price very nicely. So if we take that into account, we could expect the 200 to continue trailing price. We see this pullback, price meet the 200 again, somewhere around here, and then the continuation to the upside. I'm also in euro dollar shorts. So you can see them here. So I've got two entries. I've got one where you can see the mark, obviously the position tool. I've got a second one around here on a different account. Now, the reason that I'm short on euro dollar is more of a hedge. And this is, I've taken it very, very low risk. It's not a position that I've gone into heavily. It's more just testing the waters for now. And again, you can see the orange line here for seasonality. So I'll pull this one up for you again. So also over the past 10 years, from the mid-September, so around the 12th, until the start of October on the 4th, we've not had a single winning month over the past 10 years. So if you were buying during this period, you would have not won anything. You would have lost 10 trades. So obviously, if we're looking to short, we would have won 10 trades and not lost any trades. Now, seasonality is not a given. It's not something that happens every year or something you can forecast profits with. Really, it's more just an extra confluence. Seasonality does come into play with a lot of assets, and it does come into play with the currency markets as well. So it's something to take into account, but it's not something you should go into the markets off alone. For example, we can also see Credit Agricole's already in a short position. Their entry was down here at 1.105. Their stops are a lot higher than mine, and the take profits down here at 1.06. So yeah, we'll see how this one goes. Again, it's a very light position. I'm not looking to really scale in. If we can see sort of a price movement, something along these lines where we come up a little bit higher, and then by the start of October, we start to head to the downside, I may look to scale in again. But yeah, at the moment, it's just a starter position. The seasonality website is called Season AX. I don't have any affiliation with them. It's just a tool I use. All it is seasonality. There's no, it's not like the Edge Finder where it's got data and other things on there. It's just seasonality. It's also, you have to, I think it's about $50 a month. So keep that in mind if you're wanting to go and check it out. Do you think gold might break its all-time high tomorrow? I'll get onto gold in a moment. Seasonality on the dollar is bullish. G is bearish for September. Exactly. But again, seasonality is just based on previous data. We've obviously got a very, not a unique situation, but we've got, this situation that we're in at the moment with the dollar could very easily throw off seasonality and completely ignore it, which is very, very possible. Okay, you guys want gold? Seasonality is a sell for all pairs. That's not necessarily true. But actually, it's funny you say that because gold is also a sell seasonally this period. So again, you can see my orange line here using time for this period. So I covered this yesterday on this stream, but I'll do it again because I think it's probably worth doing if you guys are asking for it. So with gold, what we've had previously, when we've reached these all-time highs, we've had sell-offs, and we haven't really had one in a while. We did have, a slight turn to the downside when we had positive US news, but it wasn't anything too serious, especially when we look at, previous all-time highs here, we dropped about 5%. A similar situation here, when we retested these all-time highs, we dropped again, just under 5%, about 4.5%. We've not seen it this time, and we are stuck at resistance. I have a hunch we need to pull back. And again, it's a hunch. I don't know. We might rocket through all-time highs here, and I'll be eating my words. I've lost the chart I was on. Oh, the H4. Here we go. So yeah, if we go ahead and look at gold. Oh, I just lost the tab here. So again, we draw it from the end of August or the start of September through to the end of September over the past 10 years. Again, bearish for 9 years, and then very slightly bullish for 1 year. And when I say slightly bullish, we rose 0.6%. So really nothing of interest really. But then if we sort of look here and we take it from, there we go. So from sort of the end of September until the end of October, we have a bullish month again. And then sort of from November onwards, so from November till April here, we have a very bullish period again. So I'm looking to get long on gold, essentially, but not yet. What I want to see is a pullback on gold. So I was stopped out. Actually, this is one reason I'm a little bit salty. I had a really good entry around here. It's very, very similar to Nick's, but I trailed my stop loss. In hindsight, it was too aggressive, but at the time, I probably wouldn't change anything. I could, if I went back in time, I would still trail the stop just to be on the safe side. As I said, I see a pullback coming at some point. So yeah, I want to see some sort of downside movement here, whether it's just a pullback into sort of this zone here, and then we pull up and sort of continue to the upside. But yeah, we'll see. Gold, no interest until we reach this period here, and this is my buying period. So quite heavily based on time on this one. Yeah, gold is bullish. All the macro for gold, so all the geopolitical events and global macroeconomics and things, they're all bullish for gold. The thing is, even if everything's bullish for gold, it doesn't stop people from taking profits. People always try to take profits at the top. And if enough people see this as the top and start taking profits, then, what does that do? Well, it pushes price down. And when I say taking profits, I don't mean regular retail traders, because to be honest, the market doesn't really care about them. I mean the larger institutions. If they want to start buying gold at lower prices, they'll quite happily dump their positions, take some profits, and try and rebuy at lower prices. Please rewind like 5 minutes. I go over why I'm looking to buy from October. It's essentially just seasonality. So seasonality for UJ is bullish, but that's essentially just because we've been rising for such a long time. It's taken over a lot of the seasonal data. So if you look here, you can't really use seasonality in this situation because it's it's driven by the BOJ being extremely weak or Japan's economy being very weak. Whereas if they're looking to start hiking rates and start, not messing things up, but you know what I mean, trying to fix some of the problems, then this seasonality is irrelevant because the whole sort of landscape of the yen is changing. I mean, I'm not saying that is what's happening right now. I'm just saying I'm not really interested in any yen pairs at the moment, especially using seasonality for them. Getting back a little bit, where do you see the Credit Agricole position? It was in the bank reports. So we get the bank reports from institutions every weekday. And inside those bank reports, they'll list their analysis and if they're in any trades. So I aggregate them all inside here. This is my Notion document, and you can see I noted it down. So Credit Agricole in the bank report from the 30th of August, they're in a short position on euro dollar, entry, target, and stop loss. Now, to be honest, following their trades is not a good idea. Bearing in mind, institutions generally don't perform very well. They underperform the index funds heavily. And if you're sort of following a larger retail trader or a more professional retail trader like Trader Nick, for example, he can outperform the S&P. So if you don't have to abide by the same rules that institutions do, such as the risk management desks and compliance, then you can quite easily outperform them. It's more just a good outline to say, okay, well, if Credit Agricole is short, there must be a good reason. So it's not necessarily to say I'm going to take exactly the same position. It's just worth paying attention to. Just having a look. Does Vantage allow US traders? I have no idea. I don't trade with Vantage, unfortunately. Okay, so moving on. As I said, the watch list I have is very small. I'm not really in any positions. I'm still in my copper trade. This one's actually pulling back quite nicely now. So you can see I entered, we had a really nice trend line here. It was almost too perfect to avoid. And I noticed it too late, so I didn't enter off this point here. So yeah, entered basically at the peak, which was, in hindsight, a bad entry, but at the time, you can't really tell. And this was taken off the weekly and monthly charts as well. So we had two pretty strong weeks here. So I entered off the third week, which was last week. And typically, as soon as I enter, it starts dumping. However, the recovery at the moment looks quite healthy. We're seeing a couple of wicks to the downside. We're still holding this supporting trend line. And the analysis we've got behind it has weakened, but it's still healthy enough to hold. So yeah, not really looking for too much here, more just sort of a 1-to-1, although it's taken at like 4% risk. So it's actually a 4-to-4, if you will. Still in Australian dollar yen. This is a long hold, very, very small position here. So I can cut that at any time. It's not an issue. I'm not really paying attention to that one. Swiss yen, we're also in this position still. Again, this is a long-term hold that we sent in our Discord. Not looking too healthy at the moment, but again, it's for the long term. It's not necessarily a swing trade, really. It's more of a position trade that we're holding. Dollar Swiss also looks good. I spoke about this one, I think, yesterday as well. So again, you can see we're going to use seasonality here from, let me just draw this up again. So what's this? The 1st of September. So obviously we've already passed that, until the 4th of October, very bullish. Now, the reason I'm not taking it is because obviously the US is in a bit of a rocky position. I don't want to stop buying the dollar just based on seasonality, although the technicals do also look very, very good. So we've got this really nice level of support down here. So if we can touch into the support, again, similar with euro dollar, I'll take a very small position, more just to get into the markets. If it doesn't work out, I don't care. It's a very small sort of tester position, see if we can start running. And if price does react off here and the US data starts coming out a bit more positive, then I might scale in on some sort of pullback, something like this, to round off the risk at the full 2% that I normally take. The gold is sell or buy. Well, what does your strategy say? What do the economics say? What do your rules say? If you're coming onto a stream to ask if something's a buy or sell, you probably shouldn't be trading, especially a live account. But to be honest, to actually answer your question, I wouldn't be doing either at the moment based on where price is. If you were buying now, you'd be buying into all-time highs. Let's see, you're about, what's that, 1,300 points or ticks away from it, which really isn't much. So yeah, I would be staying away from gold. I'm not sure selling is a great idea either, because everything is bullish for gold. But yeah, just if you're not in gold, don't try and FOMO it. Just wait. Trust me, you'll make more money by waiting for trades than trying to get into trades, if that makes sense. So yeah, let me know if you've got questions, because to be honest, like I said, my watch list is very quiet. I don't really have much going on. A big part of what I'm doing is just waiting for the US data to come out tomorrow. So we've got NFP and unemployment. So NFP is actually forecasted to come out at 164, which I agreed with at first, but I'm starting to edge a little bit more on the lower side. Mainly actually due to the ADP we had today. That was very poor. Although we did see a lower number in jobless claims. So theoretically, we could get NFP come out lower, sort of like 150, 140, and unemployment lower as well. But yeah, I'm not sure. I'm not here to try and guess news. We'll see when it comes out. I'm not in dollar Swiss buys yet. As I said, I'm more waiting. What platform? So I use what's it called? I use IG Market spread betting account because we get tax benefits for spread betting in the UK. So for personal trading and business trading, it works out a lot better. However, actually recently, if you go on my Twitter, I put out a MyFXbook link this morning. I opened a new MetaTrader account. So I'm going to start. It's only small. It's only got like $2,000 in. It's just to more show, have that verified track record that everyone seems to like. Because I can't share. Well, obviously I could print screen, but if I print screen my what's it called? My IG account, it can, for all I can go and inspect element it. So I want one that's more stable, like a MyFXbook. So yeah, feel free to go on my my Twitter and track it if you want. But like I said, I made it today, so there's no data on there yet. I think NFP may well come out lower if recent jobs data is anything to go by. James, exactly. That's what I think. Any thoughts on pound Swiss? I've not checked Edgefinder today, actually. Let's have a look and see if there's anything. I don't think there is. When I checked yesterday. Let's see. We've got New Zealand dollar bullish. Actually, I'll go over New Zealand dollar as well, because that one is quite interesting. Well, not interesting, but there's some potential with New Zealand dollar coming. Yeah, there's not really anything for the Swiss. Euro Swiss and Australian dollar Swiss are bearish. So going off just that, it seems like the Swiss has a little bit of strength there. This was a trade I think I drew up on stream. Let's see. Let's redo it. All right, that's why. So if we draw the fib from high to low, let's fix that. There we go. We've had the 50% retracement. And I like retracements. I think they're great. So if we're looking for a stronger Swiss, and I don't have the data to back this up at the moment, but just going off very, very basic things I can see on Edgefinder, a short position may be in play here. Now, it's not something I would take because, to be honest, I'd quite like to see a correction of this move. So a full move back to sort of the pre-risk-off market that we were in. However, as we do come into rate cuts and things, we may see a slight buying of some safe haven assets like the Swiss and the yen. So something to keep in mind. New Zealand dollar. So actually, I might already have it marked. No, I don't. That's annoying. I must have lost it. So New Zealand dollar. Again, we're going to go back to seasonality for a moment. So we take it from the end of August until the end of September. So we've got a 1 month period here. We have a slight rise, but the drop here is what I'm more interested in. So I am looking to see some sort of move on New Zealand dollar down to some sort of level of support. It doesn't have to be down here. I don't really care where it is, but sort of by the end of September, I'll start looking to buy. So it would be around here. So let's just drag this a little bit. So yeah, something like this. And then again, if we go and look at seasonality from the end of September up until December, it's very bullish. We have, quite a nice move to the upside. Now it's not the strongest. Granted, it's, we still have eight wins, 7 losses, so it's not overly compelling. However, the bullish months we do have outweigh the bearish months we have quite heavily. So it's worth paying attention to. And again, this is if we see the Fed start cutting rates and we see the dollar start to depreciate in value, the New Zealand dollar, US dollar might be quite a nice buy. The seasonality would agree. Obviously, if we see a weaker dollar and a bullish seasonality, then yeah, maybe not the worst idea to potentially look here for some long positions. Let's see. But yeah, a lot of the dollar pairs have quite bullish seasonality towards the end of September. Let's see. Let's have a look at some of the indices. Not really interested in DAX. Also not really interested in the Nikkei or the Japan. Nasdaq looks quite nice. Let's see. Actually, if this is, it's not quite made it to a 50% move. Nice rejection on the H1 for sells going next 2,500. Gorilla, yes, we've done euro dollar. Rewind to the start of my segment. It's around there. So maybe 15 minutes, 10 minutes or so. Yeah, NASDAQ, I quite like where it is. But again, I'm just not sure about buying any of the US markets, so the dollar or the stock markets, really right before or a day before we have NFP. But technically speaking, wouldn't be too bad if we did see a slightly lower move down to this 50% level and then a move back up to sort of this previous highs around here. I'll keep an eye on it, actually. I'll mark it up and we'll see how NFP goes. UK 100 or the FTSE, not a market I like to trade. It's probably one of the worst markets, along with the dollar CAD. Dow looks like it's selling off a little bit actually at the moment. Yeah, we've got a nice resistance through here. So again, if we can see a nice pullback here of about 50%, might look to buy. But yeah, I'm not sure we'll get that. To be honest, it's quite a large move. Maybe we will if we get if the news comes out in favor. So yeah, Australian dollar, US dollar. Yeah, we can go over that in a moment. Let me just check the times. I don't want to run over. Okay, so cool. I've got another 20 minutes roughly. So yeah, on Dow, again, just looking for this 50% pullback. That's essentially all I do is just look for pullbacks, especially with the indices, because if we zoom out, generally speaking, we just have this drift to the upside. So if you're always buying or always looking to buy the S&P, Dow, NASDAQ, it's just one of those things. You've got an edge in your favor without having to really do anything. Obviously, there are situations where you can short, such as COVID and sort of black swan events, but generally speaking, buying them is normally the best idea. let's look at gold again. Someone said it's pulling back. Yeah. I was looking to take a very short-term position on gold. If we could reach back to the all-time highs here, I was looking to take a very small short position, just looking for some sort of pullback, but we've not quite reached where I wanted to enter. And that would be more of an intraday trade. It's not a swing. I'm not anticipating a huge swing to the downside on gold, really. If gold is always bearish in September, then will it not contradict with the FOMC meeting where we expect to go up? Yeah, well, see, this is what I was saying earlier. Seasonality is a good confluence, but it's not something you should use to trade off specifically. It's not like a... the only way you could really use seasonality as a strategy on its own is if you identified specific periods every year and you traded those every year continuously, and you might make money doing that. But doing it just, for example, now if I was to start shorting gold just because seasonality is bearish, and then obviously the dollar starts weakening and gold flies up, I've lost. And then I could make that money back next year trying to short again. But if I don't do it next year, then the strategy is broken. Does that make sense? I was going to say something and I've lost my trail of thought. I can't remember what it was. It's fine. AUD, NZD. Here. Okay. So again, I've been looking to go long, and it's just not giving me the entries that I want. So I took one position on this a couple of weeks back, had the stop loss, and I've not been in since, just because it's not shown really anything that's worthy of entering off. I'm fairly sure it was bearish on the Edge Finder, actually. I'm not sure if it still is. Let me have a look. Okay, it's not. Oh, sorry, it is. Its reading is neutral, but on the bearish side of neutral. So you can see here. Let's give it a second. So yeah, it doesn't look too great. Retail sentiment, trend, GDP, manufacturing, interest rates. Not something I'd really want to go into, to be honest. There's not really anywhere to buy either. I think the only places to buy is kind of these support levels, but just not enough, really. If we can see a convincing bounce and maybe a daily bullish engulfing candle off one of these, then maybe, but at the moment it's very, very bearish. Not something I want to be buying into. I've also just remembered what I was going to say earlier, which is going back to the thing of seasonality as a strategy. One of my traders at Elite Traders does the same thing year after year, which is shorting Euro CAD. Yeah, here, let me just change the color of that. So yeah, we took this short position here because he does this every year on during this period. So it's from August until September. If I show you here, we find, I think he did it on a different year. Yeah, here. So August to September, he does this short position every year on EuroCAD. He waits for some sort of catalyst. So in this situation, it was weakening Eurozone data. We took the short and we made 2%. So that's kind of the way you would use seasonality, is obviously using it as a confluence with news. I know you don't like silver, but what do you think of it? We actually took silver. We made some money on silver yesterday. We bought, why did we buy silver? I think it was only here. It was a very short term. It was just sort of a scalp on the 15 minutes. I think we bought it around here. It was something along these lines. So I think we went for sort of 1-to-1 roughly. But silver, I mean, as we are seeing the dollar weakening, we're seeing not very supportive data. It makes sense for silver to go up. The issue I see at the moment is we've got the RSI that's overbought. We also have bearish moving averages. So maybe a corrective short position here. But again, I'm not saying to do that. I'm not going to do it. It's just a very, one approach you could take. Whereas if we look at the daily, we're very, very bullish. We've created a higher low still holding above the 200 moving average. So really, considering the dollar weakness we're seeing and the trend, I wouldn't be opposed to going in for some long positions. The risk reward isn't great, but for me, the stop loss would have to be here, account for the 200 moving average, and I'll account for maybe a deeper pullback. But we've had a higher high here in comparison to this one right here. But yeah, that's basically all I've got for silver, to be honest. PMI just came out. Let me see. I've not got today's news open. Yeah, it came out at 55.7. Don't really think that would have had much of an effect. No, it's not. S&P Global Services PMI for August. Yeah, it's not huge. Oh, wait, sorry, 13 minutes to PMI. Am I missing some? Oh, yes. I know it's, yeah, sorry, ISM non-manufacturing PMI. That's just as I get off. I'm not sure who's on after me. It might be it's Chris. Chris will probably be able to give you a better outlook than me on that one. Going short on AUD USD, have any chances? I wouldn't look to. Australian dollar is quite strong. The dollar's losing value. Blah blah. News, bro. News isn't now. News is in 12 minutes or 11 minutes. Hopefully PMI good for dollar because it's funny, big money pumping big, then pump even higher. Okay, I'm not really sure what you mean by that. Let me just see. Chart's moving quite quick. GBP USD. Let's have a quick look. So I'm looking to go long. I kind of skipped over this one earlier, but I guess I'll go over it now. So again, probably you guys are sick of hearing this, but seasonality is one of the big factors for me at the moment. We see quite a bearish period over the past 15 years from the mid-September to the mid to start of October. So I'm looking really to get long from the 9th of October until around the start of December. Now, obviously, if we do see a weaker dollar, we start seeing rate cuts and a continued weaker labor market, then this position would actually be quite good. So yeah, we'll see about that. Short Nasdaq seasonality, good. Yeah, that could pay out quite well if it obviously does pay out. LVMH. Yeah, you're asking the wrong guy. I am not a stocks person. I am a currency trader, a commodities trader, and that's about it. Let's just see. Every time I go to watch Nick, this guy's on. I'm sorry, Gully. I'm sorry for letting you down like that. So AUD CAD. Let's see. Yeah, so I was shorting. Oh, sorry, I wasn't shorting. I was looking to short here. I think it was actually in yesterday's stream. Someone brought this up. I was saying we could possibly short off this retest here, but it's not something I want to do because, again, I quite like the Australian dollar. I think it's got some steam at the moment. We did see a pullback on the Australian dollar. However, it doesn't seem to have lasted very long. We are now starting to see some bullish momentum come back in. However, the price action here does look quite supportive. It looks like the moving averages are about to cross. We've rejected the previous support. Also, if we can close this H4 candle where it is or lower, then I guess technically that's also a lower high that we've just formed. So yeah, maybe not too bad, but again, it's not something I'd take. Yeah, no, this part's been a bit boring, guys. I apologize. It's more just the way I trade. It's quite conservative when there is uncertainty. I'm not looking to really get into much at the moment. I'm not on for today's news. I'm gonna head off in 5 or 10 minutes. Futures and seasonality looking good for my NAS position. Let's have a look at NASDAQ. Give me a sec. So let's see, 53 years. So you're short, let's see, 10 years, 5 years. Yeah, it's all pretty bearish, really. So if we go from the end of August until the start of October, yeah, it actually looks pretty good. So let's mark this up if my chart loads. There we go. So it was the end, so start here. End of September. So right here. So yeah, I guess, I mean, obviously it depends on your position really, but a short position into the end of September makes a lot of sense. And then potentially from sort of here, then we could start looking to go long. We might, yeah, maybe we'll create a double bottom down here. That would be quite nice. But yeah, I'm not looking to get short. It's not, I don't short the indices markets. It's not something I do, just to be on the safe side. However, waiting for the long position at the end of the month seems reasonable. So that's the way I'll be going with that. I don't know where the best sell will be. However, it could make a new high. I guess you're talking to someone else. Hi, James. Appreciate your market analysis about Forex. Keep it up. Thank you very much. Glad you guys get some value. What do you think about NAS? That is my opinion on NAS. Not looking to buy. Again, I'm very diamond hands at the moment. No, it's not the right word, is it? Very sat on my hands at the moment. Just because, yeah, with the news coming, I'm not interested really in being in the markets. I'm happy to watch on the sidelines and see people make money, see people lose money, but that's not my business. So let me just do another very quick rundown here, and then I'll call it a day, and you guys can get the news feed from either Nick or Chris. I'm not sure who will be coming on after. Might be both of them for the news. So after actually, let me refresh just to make sure I've got the newest data. Of the recent US data, we've had an increase on the more aggressive expectation of a Fed cut. So you can see this was at one point down at 28%. It's now risen to 45%. So it's almost even. I mean, it's not, obviously not yet, but it could be. It'll be very interesting to see what the market's expecting tomorrow after we have NFP. Wouldn't surprise me if NFP comes out poor. And is another shock. As I said, it's sort of expected to come out sort of around 165, which I'm not too confident about, really, to be honest. So yeah, we'll see. But yeah, Fed Watch isn't too convincing on a more slow and stable cut. I've just started trading. I have no idea what any of this means, but I'm here to learn. CZAZR. Yeah, I mean, I can't really explain it all quickly, but essentially the Fed's looking to cut interest rates due to lots of different factors. Normally it's about inflation. However, this time it's more focused on the labor market. Again, I'm not sure if you really know what that means, but I'm sure if you keep watching the channel, you'll start catching up. It's all quite simple, really, when you start, those things start clicking. Honestly, I see PMI being a sell signal for gold, as in stronger outlooks by index above 50. Yesterday's jolts was lower, but lower job openings may prompt clarity in a lot of sectors, right? Is someone joining? Trader Nick. Hello, Nick.
Yes. Hey, James. How's it going, man?
Good. How are you?
Good. I love your commentary, and your seasonality stuff is great.
Thanks.
I also liked your point about not shorting indices. I'm the same way, because it's just a tricky trade. Even when you have seasonality that's pointing bearish, it's like it's at a process that goes against the shorts. Like the indices go up over time. That makes it hard to short. That being said, if you have a very good reason and you can find shorts, it's the very lucrative way to trade indices if you're right. But it's just the trickiness is getting it right, which is why I generally only will ever short indices if we actually get into like a straight up bear market and you've got like everything trending lower and things look horrendous on the economic data front, then you might have a case there. But you can see just off your concept of that being such a difficult trade, how rare it is to actually get, prolonged bearish periods. It's actually pretty rare.
Yeah, the small add-on there as well is that it takes a lot more work and research to be able to time and understand a bearish stock market compared to timing a bullish one, because bearish ones happen because of a reason, whereas bullish ones are sort of the general drift.
Yes, exactly. People just kind of like investing money over time. There's money flowing into the markets over time, and companies grow over time. So it does make sense that they go up. That being said, sometimes people run too far with that. I know you and I have talked about that in the past. Like people run too far. They think like, oh, they only ever go up. Let me just leverage the heck out of them and make a bunch of money. And that's where people get themselves into real big trouble when suddenly they're not going up every day and they're falling very quickly. So it's kind of a game of musical chairs, the indices. They're very unique in that way. So gotta be careful. But anyways, James, thank you for coming on today. We've dropped the links here in the chat a couple times to James's website for elite traders, elitetraders.io, where you can follow along with their services or find out more about them. And you can also find James on social media. He's active on Twitter and YouTube and all that good stuff. James, I really liked your video on the Donvo situation. It inspired me to make one of my own. So I thought you did a good job on that.
Oh, thank you, Nick. I appreciate it. Have a good day. See you later, chat. Thank you for being great as always. See you later.
See ya. All right. And guys, we're counting down the minute and a half here to the services PMI data. Indices slightly up on the day now. You're seeing a little bit of a bounce back on the NASDAQ, I think being led higher by the NVIDIA bounce this morning. So NVIDIA is up a little bit here. Up 2.5% here. S&P's up just modestly 0.22% this morning. And again, shout out, by the way, to Forex James for coming on today. Great commentary as always. And somebody said that they try and join the stream sometimes, and then they see James and they're like, "Where's Nick?" And first of all, some of these guys that I've got coming on the show, we are lucky to have them. They got great commentary, great diverse list of items. I know sometimes people want to hear my commentary too, but do us a big favor. I think the diversity and the different thoughts and people that we have coming on the show makes it more exciting. I want it to be where you click on the live stream, the A1 Trading Show's live, you click in on it, and it's like, what are we going to get today? Whose take on this? Is someone bearish on this or bear? You want conflicting ideas. You want debate and discussion, and that is what where improvement and growth comes from. We don't want echo chambers. So anyways, we got news coming out in just a second. The services PMI data in just a moment. We'll do breaking news. All right, let's see what we get for services PMI coming out here in just a moment. Dollar index not moving too much. Euro dollar moving lower. Gold flat here. That would suggest maybe a as expected services PMI. All right, 51.5 came in pretty much exactly in line with expectations. So no real threat here. No real huge boost either. 51.5 is modest growth in the services PMI section. And hey, that's not so bad. If we take a look at the reaction here in the markets, you can see it's not a huge one. You've got SPX500 just moving up a little bit here. NAS, same thing. Dow Jones also moving up. Dollar index modestly higher here as well. Euro moving lower, pound moving lower. And I like this setup because there's a couple charts that I'm interested in on pullbacks here. So let's take a look at our main chart view here. So we've got SPX 500 here moving a bit higher. You've got NAS up 0.67 here this morning. So we'll see where that one ends. Russell's up 0.35. I'm still in this position as well. So watching that. Gold, not loving that number. Gold bulls would kind of like to preferably see, weak dollar news, which would be weak economic data. So dollar index all over the place here this morning. A bit of conflicting data. You had unemployment claims neutral, services PMI, let's call it neutral, and the ADP this morning, let's call that bad. So I wouldn't be surprised if by the end of the day, the dollar index is still a bit lower than where it is currently after the dust settles. I would be surprised if it's up big time today. If the dollar index is up a lot today, that would surprise me because you had a good bit of weak data this morning. 51.5 is about what was expected. So not a huge move there. Indices up a little bit here. Let's see what else we got. Oil up on this just slightly. Look at that. Oil spiked on that and then came back down. That's interesting. Yields bouncing on this. So, a little bit of optimism there on the services front. Let's take a look at some currencies. So I actually want to look at the euro because I was marking something up just before I joined stream, guys. Check this out. So I mentioned that I was looking for some euro longs against the US dollar. But I was marking something up because I was like, okay, where would I put a stop loss in this chart? Probably here, right? Just below that structure low. But I started thinking about it. I was like, okay, so if I'm putting a stop loss here, the other spot, the only other place that would make sense to me would be like down here. So I'm not going to put it down there. That would probably be something where I try again down here, right? So my first attempt on the long side for Euro USD would be a move probably down here. But I was thinking about that. I was like, do I just want to buy it right now? And this is a good example of why the answer to that would be no, because I like the better risk reward by being patient on this. So what I mean by that is that if I buy it right here, my stop loss is in pip format, 68, 70 pips, right? But if I wait and do see a pullback, if I'm patient enough to wait for a deeper retracement, my stop loss goes from 70 pips to 26. Now, the risk that I'm taking, quote unquote, is not getting in on the trade and it just rips without me. But that's what I'm willing to play that game. So I am looking at the euro for a possible buy, but I've got to see it come down. I've got to see it come to me. I'm not going to chase it. So I am looking at Euro USD setups, looking for long because I think there's a really good risk to reward there for me personally in my style of trading and on the Edge Finders confirmation. Euro is up there in terms of setups. So I like the euro on the long side. I don't currently have a position. This is an idea that I have. And then pound also, if we did get a rollover on this one, looking at it somewhere between here and here, probably this 1.30 level, I like that setup as well. So there's a couple of US dollar crosses that I'm watching, mostly dollar bearish setups. But it very much depends on if the chart comes to me. If we get a pullback here on the euro dollar, I think the risk makes sense to take on my account. So I'm looking for pullbacks, and it's kind of a boring day for me because I don't have a ton of positions on, and I'm kind of on the sidelines with a bunch of stuff. My only two positions right now that are active trades are the Russell long position and gold long position. Let's take out neutrals again. And what you'll see my dilemma here in a second. We've got three charts that I can actually trade because I personally don't trade minor currency pairs. I like to trade US dollar stuff because I watch the US economic data the closest. It's what I'm most comfortable with. So if I take the minor currency pairs out, you can see my dilemma is I basically only have Kiwi dollar, euro dollar, and the pound dollar. So that's my current situation, but it's not a problem. It's a problem if you're impatient. It's just a reality of trading if you're, serious about this stuff. Sometimes this is what happens. Sometimes you get setups that you're just waiting on and you very well just miss them. So let's say, for example, that I'm watching, Euro USD on a pullback here, but we don't get the pullback. Let's just say we shoot up here through the highs. Then obviously that's not ideal because then I couldn't get in on the move, but I'm waiting for this pullback to come into play. If it does, I'm into a trade. If it doesn't, oh well. If boredom's not your thing, then don't trade or lose your money. That's so true. So true. Because it's just, like trading is a lot of waiting, and it's not fun because people, people think trading, they're like, oh, I want to be a day trader, scalping the market in, out, making money all the time. And by lunch, I'm sitting on 10 grand gains and I can go have lunch. It's just not the reality of trading. Like trading is so much boring, waiting around, market's not moving, or it is moving, it's moving without you. You're not in a trade, or you're waiting for a pullback and you're still just sitting on the sidelines. It's a lot of boring kind of nothingness. But in terms of where we're at, let's take a look at things. So in terms of scheduling, the next big thing here really is just NFP. So tomorrow you have the non-farm employment change figure. We're expecting 164,000, and we had 114,000 jobs last time. We're expecting an uptick in jobs from the previous. If that number comes out at higher than that, then that probably would lead to some strength in the US dollar and strength in the stock market, because investors are a little jittery about the labor market right now, and reasonably so. There was some big concerns that happened this week. So going into NFP right now, it's looking like I'm going to be pretty cash heavy going into the report. I don't have a lot of positions on. I'm open to putting on some positions, but again, the chart's got to come to me. Let's take a look at the dollar index for a moment. So dollar index, I'm surprised it's not more down than it is today. We had jolts yesterday, poor, ADP numbers this morning, poor. So there's been a lot of negative news here for the dollar to digest. But again, we'll see if we can get it. It all depends on NFP tomorrow. If you get a strong NFP tomorrow, you could take out these highs and maybe start moving up to, this 102.67. I would not be surprised. If you get a really solid NFP report tomorrow, we could be right up to that 50% retracement by mid-morning. On the flip side, if you get the poor jobs data, what I'd be looking for, signal on the dollar tomorrow that I'm looking for, is a break through the lows. If you get a break through the lows, then a lot of the setups that I may have missed on those euro longs, pound longs, etc., may set up again for the break and retest idea. Let me show you what I mean. So if we get a big slide tomorrow in jobs data, I'm not saying that's what I think is going to happen. I'm saying if that happened and we break through the 100 mark, if we get down to 100, something like this, then suddenly the retest trades may form again. So even if I'm not getting the trade on euro dollar today, obviously if the dollar index falls hard, the euro, the pound, they're going to rip higher, right? So which means I might miss my trade entries that I'm talking about here today. So I mentioned maybe looking at euro longs. So if we get really weak jobs data, there's no way I'm getting this entry, right? If we get really weak data tomorrow morning, then suddenly euro will be like up here really quick. The question would be, can we get, there's two scenarios that I like the euro right now. A retest of this low, or a breakout of the high and then looking for the retest there. Now, there is also the chance that we just see this move and then I don't get anything, no entries, no trades. And that's where the discipline comes in, and I just kind of sit there and play with my hands, because there's nothing for me to do in that situation. I can't chase the market. I have to wait for it to come to me. Now, what if this trade sets up by this afternoon? Would I take it? Probably so. Before NFP? Yep. Because I have enough reasons to like the setup. If it comes down to that area, I don't think it will stay there very long. And if it breaks the lows, then I take a loss. I just move out of the way. So, yeah, we'll see. All right, gold. So I'm already in a gold position. GLD, the GLD ETF is something I'm currently long on. giving back a little bit of profits here this morning. Here's the 1 hour chart. So gold is near the highs. If I am not in gold right now, do I take a trade? No. Why? Because there's no setup on the Edge Finder. That confirmation is something I need personally for my trading. I like to see the fundamentals lining up aggressively. So if we take a look at gold, let's do a deep dive on the gold score for just a second, because I'm sure there's going to be people who are saying, why isn't gold bullish? So this is why gold is not currently getting a bullish rating on the Edge Finder. So if we take a look at this, the COT report is very positive for gold. We know institutional money has a big long position on gold. So institutional money, very bullish on gold. Check one. All right, that's bullish. Retail positioning's mixed. Seasonality, not good. So the month of September, not historically a great time for gold. So that's going to dock us 2 points. Trend is to the upside though, so give us 2 points back. You can kind of see where I'm going with this. There's some mixed data. GDP was really strong. Economic growth coming in solid. That's not necessarily great for gold. Manufacturing PMI came in very weak, though. That is positive for gold. Services PMI came in, what did it came in? It came in slightly higher than expected today, so that's -1 for gold. Retail sales came in very strong, -1 for gold. Inflation statistics, cooling, but we also like to see commodities go up when higher inflation exists, so we're kind of getting a neutral reading. That's how the Edge Finder scores inflation. And then jobs data, the latest ones that we have, NFP and unemployment rate, both showed weakness in the labor market, positive for gold. Do you see where I'm going with this? Do you see how we just categorically broke this down? Interest rates are coming down. Okay. Does that make sense how we just broke that down piece by piece together? We went through all of the major categories that the Edge Finder tracks, and I explained as simply as I could in a very brief summarized view how we are getting a neutral bias on gold. There's not enough here to say we are decisively looking very bullish or very bearish. We're just getting kind of a mix. If anything, it leans bullish. You got a +3. The Edge Finder considers a +5 to be bullish or a -5 to be bearish. So a +3 is closer to the +5, but it's still not like outright, okay, we've got a very strong confirmation here. Does that make sense in the chat? Do me a favor, type yes if that breakdown made sense or it was helpful to you. I just want to explain how, kind of the Edge Finder scoring works for people who maybe already have it and are curious, or people who don't have it and they just want to understand like the methodology here, the fundamentals. Here's the thing about fundamentals, right? A lot of people are very confused by fundamentals. Fundamentals are too much for them. It's too confusing. It's too overwhelming to try and track it all. So the Edge Finder does a cool thing. It tries to take what is kind of like theoretical and turn it into something systematic. So it's looking at all these statistics, pulling them all into the Edge Finder and assigning and ranking and filing different economic data points, scoring them in what we hope to be an easy to understand process so that fundamentals are not so daunting. Fundamentals are so key to understanding the way the market moves, but you'd be surprised. So few traders actually ever use them because of how overwhelming they feel they are. So Edge Finder helps that. That's the whole purpose of the tool, is to help more traders out there, not just the hedge funds and banks that are using fundamentals, but the average trader out there to start understanding the macro, understanding why markets are moving the way they move. So real quick, I'm just going to mention also, if you guys would like to get access to our tools, we work on these day in, day out. We are a software company out of Atlanta, Georgia. A1 Trading builds tools for traders. And if you don't have a copy of the Edge Finder, it is currently 35% off. We'll drop the link here in the chat. If you'd like to speak with a member of our team, you can pay with crypto. You can do payment installments. You can try it for 30 days. It is a paid 30-day trial. If that's something you're interested in, you can chat with a member of our team. So on and so forth. So don't miss it. 35% off ends with NFP tomorrow. So if you'd like to get our tool before that, it is currently 35% off, and it's a one-time payment. You pay once, you got the access, and then you're good to go. You can use this data like we do every day on show. So if I'm not here for a week, or I don't go over the charts that you want to look at within the Edge Finder, you can just do it yourself on your own, platform. It is our attempt to build something that institutional traders would use, but allow the average trader out there to use it. So yeah. Anyways, let's see. The other thing tomorrow is we've got FOMC member Waller speaking, which could be market moving. I know he's kind of a volatile Fed speaker. Let's see where everything's at. S&P 500 popped on the services data and then has come back down. I would not be surprised if a lot of markets between today and tomorrow's NFP report don't make a big move anywhere. I would not be surprised if like that's kind of the smoke show for the day. Like if that's all we've got for the whole day, I would not be surprised in terms of volatility, because everything is now just saying, okay, now we wait for NFP. Gold is getting closer to the highs again. Let's see if we can get this break today. That would be awesome. If you get, by the way, if NFP comes in weak tomorrow, I think gold probably is off to the races. We probably see a new high, because that would again send the dollar lower. If you get a very weak jobs report tomorrow, the market is going to say, all right, dollar index, you're going lower because they're going to cut rates hard, which would send gold higher. I have a position in gold. It's not a very big position. I took a very, very small size position on gold when I took it, because at the time I had a very, very full positioning in my account. I trade on a stock brokerage account. So I have available margin. And at the time I had very little available cash in my account. So I took a very small position on gold just because I like the setup. I'm kicking myself because if I had taken my normal position, this trade would have been a monster, but it's still a good trade. We're making money. I can't complain. So we're up, $800 on this. I took it mostly for principal. I liked the setup, but I had many trades on elsewhere, which ended up, changing, because now I have trailed out a lot of trades since then. But we'll see. I really don't hate the idea of going into an NFP report pretty cash heavy, meaning I have a lot of capital ready for setups that could occur. Gold's up 1% now. Very nice. Love to see that, by the way. The intraday spike lower and then rebound. Gold seems to be one of the few markets. Well, not the few. I mean, gold just seems to be making a lot of sense right now. Gold makes a lot of sense. And if you don't know what I mean, like the quick breakdown is that we've had ADP, JOLTS job openings, unemployment claims. Those are the three economic data points on the labor side that have come out this week that were big ones. And all three of them were not impressive. Unemployment claims was kind of neutral, but ADP, which is like the private sector, really bad. Job openings in the US, very disappointing. So when you say, oh, gold, it needs to come down, it's too high. Well, the data this week really suggests that it has room to go up. So that's why I say it really makes a lot of sense this week, because jobs data cooling off way faster than people are thinking. I would not be surprised if we take out the highs today. I wouldn't be surprised that if you get weak NFP data tomorrow, that gold rips higher. We could see, 25.50 by tomorrow if NFP is very weak. Now, again, that's a big if. It's a big if, because Nick, you're making a big assumption there. I'm not saying gold will go higher tomorrow on NFP. I don't know what NFP will do tomorrow. I'm saying that if, keyword, you get NFP data that is very, very weak, gold, in my opinion, is likely to rip hard. Because then what people are going to say is, oh, Fed's going to cut rates into an economy that is looking shaky now, right? A couple weeks ago, looked like, well, several weeks ago, we looked at the market. We said, oh, the economy's shaky. Then a bunch of data came out that looked good. Now we're starting to get a lot more data that's showing economy's looking a little rough. And that brings me back to where I kind of want to be in that situation, which is long gold And I also want to be long things like TLT. Let's look at TLT, by the way. TLT, I might be interested in a pullback play on this. If you get a bit of a pullback here on TLT, I may take an entry on this one as well. TLT is a 20-plus year Treasury bond ETF, which basically means that holding TLT, you're holding a bunch of long duration government bonds from the US. And they typically do historically well in a very recessionary, fearful environment, which I don't necessarily think that we have a huge recessionary fear coming. But I do think that there's been a rising possibility of that happening. Stocks kind of at the top of their range here today. We'll see where that goes. Also, do we have Chris coming on today, James Chandler? I saw it was 10:15, but hasn't popped in yet. Chris not available today? Okay. No worries. No worries at all. Okay, guys, that's going to probably wrap it up for the show. Before I end, remember, guys, 35% off ends tomorrow for the Edge Finder. You can get access by clicking the link in the chat or in the description down below to speak directly with a member of our staff who can get you hooked up with our 35% off sale. Don't miss it. It ends tomorrow. And with that said, guys, thank you very much for tuning into today's live stream. Hope you got plenty of value out of it. And we will see you back tomorrow for the big one. See you guys.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.